Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. We oftentimes get uh, we oftentimes get stopped out of trades, right? I mean, it's not something that unusual. There are plenty of instances when a trade doesn't work, and whether it hits a technical stop or the net debit stop, we get booted out of the trade. Definitely not how you want it to play out, but it's just a reality of trading that not every position is going to work in your favor, and having management skills for the ones that don't work is arguably as important as having proper management skills for the ones that do work. Datadog, all right. This was one I was looking at for a swing trade. I liked how it had rolled kind of into after earnings. It rolled into uptrend support, bounce, and then was working on a potential reversal back above this really critical 50-day moving average, right? And um, when I was looking at a swing trade, I guess it was maybe a little bit of just bad timing in the sense that it was right when a lot of tech started to break. So it was setting up for a nice reversal, and it was working on a break above this 50, right? This 50-day M&A, 50-day simple moving average. But tech ended up rolling right when it was working on that move, and it got dragged down. It lost support, and it hit the net debit loss for that swing trade. So when it basically got down into like the high 70s, it hit the net debit loss. So the October call spread position was closed. Now, I obviously don't enjoy seeing it come back and basically setting up and doing exactly what I was hoping it would do a couple weeks ago, right? But at the same time, when I respect my stops, and in general, when you respect your stops, hopefully it puts you in a position to be able to revisit that name if it does set up again, right? Because had I just held on to the trade, maybe it would have kept leaking. My options would have maybe lost even more value. And then instead of approaching it now with a fresh perspective, maybe I'd be approaching it from the perspective that I need to like get out of it immediately because my options are running out of time, or maybe I don't want to like add because I was down so much and now it's come back and I'm more interested in just taking money off, right? So, not only does it help prevent like stocks that just keep moving against you and your options lose instead of 15, 60%, they lose 80, 90, 100%, right? But it also allows you to like revisit those trade ideas when they set up again with a fresh perspective. Now, Datadog triggering above the 50-day and looking like it's going to make a move into the gap, right? I wouldn't I wouldn't approach this with the same risk profile, okay? Because like when I first went after it, obviously didn't work. I lost money. Now when I revisit it, and or if I do revisit it, and just in general when I like these types of ideas, when I'm revisiting something that was like a losing trade prior, I'm looking at 25%, maybe like a third of the original risk. Okay, so I do want to potentially be involved, but at the same time, I also want to keep my risk lower because you have to acknowledge that it already was a losing trade. You already lost money in it, and I don't want to like quote unquote revenge trade, meaning like pile more money in, have it fail again, and then ends up being two losing trades in a row, right? So what I like to do is keep the risk about a quarter to maybe like a third of the original, so the original swing trade, and then kind of look for a move, and then maybe you able to make your money back. Maybe you're able to make money on top of that, but the idea is keeping risk overall lower. All right, because again, you don't want to keep compounding losses on a stock because maybe it just doesn't want to do what you're expecting it to do, right? So don't want to keep compounding losses on top of each other. So keeping the risk low, so about 25 to 30% of the original net debit of that swing trade. You could even look maybe at like the same time frame of options if they were longer dated, but if not, maybe looking at like a fresh few weeks, maybe like a month, depending on what the time frame was originally. And again, I'm not afraid to like revisit these things as long as I can keep my risk in line. All right, and that's really like the important thing is like I don't want people to like get burned once and then like write off that name, right? Like if the stock sets up, and it looks good, and you can get into a strategy where like the risk, you can control the risk, I think it's worth taking a look at. All right. So if you like this video and you're looking for more information on option swing trading or more information on option trade management, please follow up the link in the description of the video for more information on options to play. Hope you guys have a wonderful night. Stay well, and I will talk to you all tomorrow.